You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
All right.
Good afternoon. Welcome back. Today is Friday, 16th day of January, 2026. Michael's going to go first today. He's got some important things to take care of. So, Michael, if you're ready, just grab the screens and take it away.
I am ready. Let me just grab everything and bring it over here. And there it is. All right.
Okay. Let me adjust this, and there we go. Looks good.
Excellent. So how are you feeling today? I didn't even ask you this morning. Sorry about that.
I'm okay. How's Jada?
She hasn't eaten anything yet. So
yeah. Sounds like she got it worse than I did. So
we'll see. We'll see. Hopefully it'll get better.
We'll keep praying for her.
All right. Thanks. All right. So here we go, guys. It's Friday, the 16th day of January, 2026. Now, if you have not taken a free trial with us and you want to take a free trial with us, go here to mytradingiq.com, click on the purple button right there. There's no credit card required for the trial. Just click on that purple button and it's going to bring you, actually, I refreshed this last night. So let me refresh this right now. I'll bring you to next week's. Next week's. Here it is. All right. So it says it's going to start Tuesday, January 20th. Now, I'm not going to be there. I'll still open up the room on Tuesday, January 20th, but I'm not going to be there in the room on Tuesday, January 20th, okay? But I'll still open the room up. But this is how you take the free trial. You just go in here, fill it out, name, email, phone number. We ask for the phone number, but I mean, we don't call you unless you want us to. And down here at the bottom, it gives you TradingView login ID, okay? Now we only need that to enable the indicators for you to get your indicators indicating on your desktop. So you can have full access to the indicators during your whole 5 business day trial. So if you do sign up now, or anytime between now and Tuesday, now through Tuesday, you'll have the rest of next week and the week after that. So you actually get a week and a half of trial. Now, spreadsheet for today. Okay, so we had a pretty good day today. We ended at the high on every one of the markets. So today, if you're going to do the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 16th day of January, 2026. As I said, and we were up 160 ticks on the NQ. That's the high of the day. We're up 29 on the YM. That is the high. We're up 50 on the gold. That is the high. And 14 on the ES. That is also the high. So $1,620 per contract is as high as we got today, and that's where we ended it. Today it took 11 minutes and 7 trades this morning because I kept getting really tiny trades. Right at the beginning of the market, just kept doing these really quick moves, just enough to bump the stop, but no follow through, back and forth and back and forth. So it took 11 minutes and 7 trades. We didn't get any stop outs in there. We didn't have to cover a stop out. We just weren't getting any follow through. To get to $132.50 with 1 contract at $1,325 with 10. And we took a total of 52 trades today with 5 stop outs. So that puts us today, I didn't realize, 51, 52, 53 the last 3 days. Today we're at 90.38% of our trades were break even. But we did have some break even trades today too. So on the month now, we're $11,770 over 10 business days, averaging $1,177 per contract per 2-hour business day. Same thing on the year. And now the 2420 blueprint, we are now at 0.93 hours we've traded. And in those 0.93 hours, we're up $1,312. So we're averaging $1,406 per hour. We haven't worked a full hour yet. We're at $1,312 if you did everything just like I did. Okay. Okay. Peek in here for a sec. Okay. Let's look at the gold first. Let me move this and actually get the question box out in case anybody asks any questions. I don't think anybody will right now. And I want to get this down to the bottom. We are averaging in this session, we're averaging about 13 minutes of trading time, and in those 13 minutes, we're averaging $135 per contract in the actual trading that we do. So let's start out with the gold here and go control back.
Did we lose your volume?
Oh yeah, you did. You did lose my volume for a second there. Okay, so on the gold here, our first trade of the day right here on gold was plus 10, I believe. That's where we ended up getting the goal. But that was the first one on gold. That wasn't the first one altogether. At that point, I think we already had 2 on the YM, 2 on the ES, and 1 on the NQ. Something like that. But we ended up getting 10 on that, and that's where we got the goal for the day. There were a whole bunch of bars in there. That's what I was saying. I couldn't believe it was still the same day. The next trade on gold, we picked up 20 ticks. That got us to 30. And then 1 tick to 31. And then another tick to 32. And then another tick to 33 somewhere. Right there to 33. Then another couple to 37. Then finally we stopped out. We went from 37. We went from 37 to 41. And then from 41, we dropped down to 26. So there was a +4 in there somewhere. And then we dropped down to 26. And then we had there were a lot of bars in there. Gold was really moving it at some point today. And I wasn't paying attention to it because look at all these bars. These are all like just in a few minutes here. From here all the way over to here is 3 minutes. All right, so we went from 26 right here to 27, then 27 to 37, and 37 to 38, 38 to 39, 39 to 49, and 49 to 50. That was all the trading we did on the gold this morning. Okay, there's probably a ton more bars in here. I'm not going to go through everyone bar by bar because there's just been so much action on the gold today. Jim C was saying he switched the gold to a 19 range this morning, and that was good for him. I don't know what it looks like on a 19 range. Let's see. It is fewer trades, that's for sure. Well, I'm not going to go through one on a 19 range either. Limited time today to get stuff done, and I want to be able to get in there and trade some today too. We have our average of 14 minutes. I'd like to be able to use all 14 minutes of trading time today. Okay, this is the YM. So our first trade on the YM was here with 1 tick. Then our next trade was here with another tick that got us to 2. And then another tick got us to 3. And then another tick got us to 4. That's how it was with the YM. We had a break even, and then we stopped out, and that put us at -11. Then we had a +20 right there. That got us up to +9. Then we went from 9 to 12 to 20 to 25 to 26, 27, and then 29 is how we ended it. And during the break, it looks like 1 trade right there for the YM. Yeah, I guess that was trade right there. That would have stopped you out. So one good one and one stop out on the YM during the break. Okay, and now the ES. Let's go back to the beginning on that guy. Wow, not a lot there on the ES either. All right, so we had a break even. Then we followed that up with a one tick trade right there. And we had another break even. And then we had a +2 that got us to 3 altogether. And another break even. Then we had a +2 that got us to 5 and a +8 that got us to 13. And then one more tick somewhere that got us to 14. And that was it on the ES today. Now during the break on the ES, looks like there was one trade right there. That was it. Just one trade during the break. It was an okay trade. All right, and just look at this. We had on the NQ now. Control and back. All right. So our first trade on the NQ was right here. Excuse me. First trade on the NQ was 4 ticks. Then the next trade was right there. We picked up 45 on that, so we're at 49. Then we went from 49 to 94. Picked up another 45. Then went from 94 to 147. So another 139, sorry. 139. So another 45 or something like that. And we stopped out. We picked up some more to get to 147, and then we stopped out. Went from 147 down to 122. Then we stopped out again. Went from 122 down to 97. Then from 97 to 102. Then 101. 101 to 105. And had a series of 4 tick trades, I think. Don't look like I marked them all. I don't think I did. Went from 105 to 109, 109 to 113, 113 to 121, 121 to 141. Then we stopped out down to 116. Then we had a 20 tick trade to 136, and then a 14 tick trade. 24 tick trade to 160. And that's where we ended it with the NQ, 24 tick trades. That was a nice way to end it with the NQ. Now, during the break, it looks like there was a trade there that was good, a trade there that was good. Not there. Trade there that was good. Flip it around. Trade here that would have been break even. Then the range tightened up after this big move right here. The range tightened right up. And in that tight range, we really didn't have any trades. And that brings us current. All right. So today, if you have not, for anybody just coming on right now, if you've not taken a free trial with us, go here to mytradingiq.com, click on the purple button. No credit card required for the trial. Now is the time to take the trial. If you haven't taken it and you've been thinking about taking it, right now is the best time to take it, because you get from now until pretty much the 30th on the trial. Okay, because this is going to be a few days next week, and then the week after that, you'll have access. So it's a great time to take the trial if you're going to take the trial. Go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. That's going to bring you to the registration page right here. On this page, all we ask for is your name, your email, and your phone number. It does say right here, Tuesday the 20th, the room will be open, but I will not be in it. Okay, so I'll open it up on Tuesday morning. That's my plan anyway. Open it up on Tuesday morning and let it run. So you guys can watch my charts if you want to, or if Dwayne comes on, you can watch his charts. But I'm not going to be there for the room on Tuesday morning. Okay. That is the current plan of action. All right, so let's get in there and trade if we can. The gold needs an up close right now. I think it's going to be too far away though. Wait, 3. It'd be exactly right now. If it goes straight up right now, it would be a trade. Oh, there it is right there. Ding. There it is. I think is that close enough? It's right on it. Look at it. And then it's one tick below it. That's what I was thinking if it went straight up, it would be okay, but it's one tick below it. All right, the NQ is a trade. I'm taking the NQ right here. That is a valid trade. I can see that. Okay, so I took the NQ trade, and we'll see what we get out of that. The market seemed to have slowed down quite a bit. They were all over the place this morning. Really fast movement without any follow through at the very beginning of the session. Yeah, the NQ is going to go 10 ticks into profit, so it's going to be 11 and a quarter right there. It's going to get up to bump the stop. The Dom is suggesting it's going to get up here to 1250. And 2150 is a swing high. So we should at least get the stop to 4 on this. Okay, the YM just needs an up close also. The YM needs an up close. Will be a trade there. 91 up to 601 on the YM. Okay, and there it is on the NQ. It looked like it should have given my stop, bumped my stop to plus. Okay, the YM didn't trigger. The NQ, let me just go check it and see if it gave me the 4 ticks or not. NQ. And here it was right here. Buy and sell. It actually didn't. It should have bumped my stop and given me some profit, but it actually gave me it didn't give me a full stop out, but it gave me a little bit of a stop out. It gave me a 9-tick stop. That's what it gave me. That's weird. But that's what it did. 9 ticks. Let me put it in there. It's this thing right here. It filled at 711 and it exited me at 975. 709.75. So it was 11. Actually, it was not a 9-tick stop. It was a 5-tick stop. 11 down to 10 to 975. So instead of having 4 ticks in profit, I got 5-tick stop on that. All right, well, it's about to give us another trade right here on the short side. So I will quit whining about that slippage that it gave me. Bad slippage this time. And get ready for the short. And there is the short. And now that one has bumped it to +4 and then some. So that is 20 ticks right there. 24. All right, so we lost 5 on the first one and we made 24 on the second one. That was a valid trade right there. And let's go put it out here before I mess this up. Too bad. Here it is. Today is day number 30. This is 116. And right now we are 19 here. So we had -5 and +24. That's what we had so far. Now, I don't really want to call it a stop out. But I guess I will. And we're going to have had, I think, 18 minutes of this session. Okay, so that's where we stand right now. All right. I didn't see that while I was doing that stuff. And let's see this. Macy completed a drive. I got a voicemail. Unlock. I'm going to need a down close here on the ES to have a trade. YM ended up being nothing. The gold actually had a trade here too just a second ago right there. I didn't get. Okay, so I need the down close here on the ES. This was a trade over here on the NQ. I think the ES is going to be okay. Let's see. It's got a high of 7.5. Actually, the S is going to be off, I think. 975 would be 775. I guess it'd be okay. Just right. There it is. All right, so here it is on the ES. Okay, let's see where that goes. 4 ticks. The stop should have gone to break even. There it is. It went to break even. I'm going to lock in 1 tick on that ES. And it took me out with one tick. This was a trade back here on the NQ that I didn't get. Right, so we got one tick here on the ES. Let's put that in. This one is ES. One tick there. 3 there. And this should be a 30. Wait, back here. Does anybody have any questions about any of the stuff that I'm doing right here? Anybody? We need a down close over here on the NQ right now. I think it's got a high of 11. This is at 550. That's not going to be, it's going to be away from it. It's going to be 2 ticks away from it. It's too high. We might get something here on gold. What time is it? 12:20. So we have a good solid 10 minutes left. Did I put that one tick in here with the extra trade? Yeah, I did. Right. I'm all caught up, I think. All right, we didn't go the full cycle here, so it's not going to be a trade on the NQ. We didn't go full cycle on, well, we did go all the way up, but we didn't go all the way back down. What is that? Oh, that extra line. That's what that is. It's my synthetic one. Threw me off for a second there. This one. It's based on a 1 second bar. 4 range created from a 1 second. All right, the gold needs a down close right now. Gold is trading kind of thin, not super thin. Still just needs a down close. Now it's too far away. Too far away. Cancel, cancel, cancel. Cancel, cancel. The ES has nothing right here. YM has nothing, and the NQ did not complete the cycle, so it has nothing either. It's like everything's going to flip the YBRs up right now. That's what it's looking like. Everything's looking like it's going to go up. All right. It's been going sideways for the past, yeah, it has. This is all a lot of sideways action right here, Michael. Get it on 100 range. 12:23. So in the last hour on 100 range, it's produced 4 bars. We need an up close followed by down close on the YM. Gold's not anything. NQ needs a down close followed by an up close. We need 2 down closes followed by an up close. That's what the gold needs now too. Actually, if you get a down close on this bar, then the next bar could be a trigger on the NQ. If you get an up close on this bar, it's going to flip the YBR on the YM. This could be the trigger. This could be the trigger still. No, it's too far away. It's too far away. It's not going to be a trade there. You know what I just realized? I have a new invention. Japan. A little mouse shelf. Just a mouse shelf that hangs below the desk. Because I lean to one side when I have my desk up a little bit higher, and I have to lift one arm up off the chair to get to my mouse. I lean to one side all the time. So I either have to adjust the height of my desk, which I can do, because I'm right-handed, so my mouse. And the other way I'd lean to the other side is if I did it with my left hand. So I can learn to do it left-handed. Or make a little mouse shelf. I'm going to make one. That'd be easy to do. Fun project for me this weekend. All right. So we need an up close here, 2 up closes maybe to get a trade on the NQ. Gold is right there. We just need a down close on the gold now. Down close still on the gold to work. Let's get a high of 88.5. Let's be selling 87.5. Down close on the gold. And not quite there on the NQ. And there it is on the gold. Here it is on the gold. And we'll see what happens with that. The NQ now could have a trade. Okay, there it is on the NQ also. Okay, so the gold has not gone to enough to bump my stop to break even. The NQ just stopped me out. Now the gold needs to go down one more tick. But we just got a minus 20. There goes the gold. We got a minus 25 on the NQ. I'm going to lock in something. That's 6 on the gold. 10 on the gold. Okay, so we get a plus 10 over here on the gold and a minus 25 over here on the NQ. It's almost a wash altogether, money-wise. Minus 25, that puts us at minus 6 there. And the gold is plus 10. So we're at 825 now. That's 5 there and 2 there. Okay, back in here. Let the gold run a little longer, it looks like. Yes, I'm really leaning on that arm, that side on my chair. I can move this side up. I can move that side of the armrest up on my chair, then it wouldn't be so bad. It's 12:28. And so we were up over the daily average until we stopped out on that NQ. We're pretty close to it now. And right now with one contract, we're at 82.50. So we're 50 bucks off the average, and we're almost at the goal for the day with one contract. We were there a minute ago. The ES is pretty close to giving us a trade. It needs, I'm sorry, I take that back. ES is not close to giving us a trade. It is actually. Just get up close here would be okay. 86.25 on the ES. So it is pretty close to giving us a trade. 86.25 would be one tick up above the midpoint, so that would be a valid trade. Okay. This one over here on the YM, it wasn't off the midpoint. So that wasn't anything. The gold could give us something here, but it's not quite there yet. Yes, it's about to trigger. Okay, and the gold is about to trigger again too. Gold just gapped up. Gold's still gapping up. Could still be a trade though. Down close. The ES never triggered. Into Storm HQ. Talking about possible snow here tomorrow. I'm gonna shut everybody down for the weekend. Go buy bread and milk right now. Crazy here in the south. This is not going to be a trade here. It could still be a trade on the gold. Could still be a trade on the gold. It's not going to be a trade on the ES, so I'll cancel that one. Now the gold has a high here of 0.5, and that is at 0, so it's not going to be a trade on the gold either. All right, and I've run out of time. So I have people coming here very soon, so I can't run over. So this is how we ended up the session, guys. Now, it's really not. We really had one stop out. The other one was slippage. So we hit 80% of our trades were break even or better, not counting the slippage. We're at 825 on the session, or 8250 with one contract, -6 on the NQ, +10 on the gold, +1 on the ES. 5 trades, 1 real stop out in 18 minutes of time. So now, after 30 trading days, we're averaging $134 per contract in this session, and we're averaging 13.81 minutes in this session. What does that say? Divided by Z5439. Z5439. That's this one. Okay, so that is going to be, let's just do this equals this minus 15. Oh, I just did that. Where am I using that number? I don't know. But anyway, it's over 30 days. Oh, it's down here. Something like that. It's that divided by that. Anyway, we're averaging $134 per session in here. And our sessions, oh, that's what I was doing it right here. Our sessions are about 13, 14 minutes long, the actual trading. If you've not taken a free trial, let's go here to mytradingiq.com, click on a purple button, no credit card required for the trial. Click on that. It's going to be to this page. Just fill out the registration form. Now is the time to take the trial because you get it for almost 2 weeks. Okay? All right, that is it. And with that, we can pass it back up to fabulous James, Arizona in Studio A overlooking South Mountain, America's largest city park. Dwayne is ready.
Yep, I'm ready. Okay, recap of the morning session.
Today, it took 11 minutes and 7 trades to $1,325.
Good job.
Thank you.
All right, well, good luck with all your stuff you got to take care of this afternoon. And
thank you.
Have a nice holiday on Monday, everybody. Monday's a holiday, MLK
Yes.
Day. And so,
yes. All right, you too. Be safe.
And I'll see you when you get back on Wednesday.
Okay, sounds great.
All right.
We'll see you all.
Take care.
Bye.
All right, guys, we're going to move through this a little quicker than normal. I'm going to give you the numbers here from around the world. I'm going to start here in the US with the cash markets, or the indices as they're called. Currently the Dow is down 33 points. NASDAQ is up 8. S&P 500 is up 5, and the Russell 2000 is up 11. I'm going to refresh that and just make sure it is correct. I think it is. Yeah, well, I refreshed, so the Dow down 28, NASDAQ up 9, S&P up 5, and the Russell up 11. So it is a mixed market. In the commodity basket, crude oil up 74 cents, trading 59.93 last. That's a gain of 1.25%. Gold down $37.80, trading 45.85.90 last. That's a drop of almost 1%. And silver down $4.29, trading 88.05 last. That's a drop of almost 5%. In the Asian markets at the close, the Nikkei dropped 174 points. Shanghai dropped 10. Hang Seng fell 78. And in the European markets at the close, FTSE down 3. The DAX down 55, and the CAC down 54. So we had a red day in Asia. It was a red day for the UK. And at the moment, it's a mixed Radio Friday here in the US of A. Got 3 of the major indices barely in the green. The NASDAQ 17 points. That's pretty light for the NQ. S&P up 8 now, and the Russell up 10. And the red one, the Dow, down 28. So, okay, turning quickly here to Logic 247. That's our 24/7 around-the-clock E-mini alert service. We're currently in week 389. Over the last 389 weeks, we've issued over 21,300 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less of the alerts being stopped out based on simple market structure and the simple process we teach all of our passport holders. Valerie did the recap this morning at 6:30 a.m. Eastern, so there will be some changes based on today's price action, I would imagine. She'll update it and finalize it for the week. It was indeed a light week, 33 alerts total. At the time she did the recap, we were still waiting on the outcome of 15. So that left us with 18 actionable alerts, of which 2 or 11% would have been stopped out, again, based on simple market structure and the simple process we teach all of our passport holders. Now, the purpose of the logic alerts is to help you learn how to read a chart. It's very important. If you're going to trade for a living, you need to know where to anticipate resistance, where to anticipate support. I say anticipate because there's no way to know for sure. That's simply not possible. No indicator, no oscillator, no algorithm, nothing, not no way, not no how is ever going to be right 100% of the time. It's not possible. It defies the laws of science, physics, and even God. However, learning to read the chart and knowing where to expect those will reveal the windows of opportunity where you can get in there and get your goal for the day and then get on your way and go do life. The logic alerts can come out anytime around the clock. 2 a.m., 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session and vice versa. Now, 389 weeks is a very long time, over 7 years. But many years before Logic 247, we had our original alert service, the concierge trade alerts. Now, they're different in a lot of different ways. But for the purpose of this discussion, I'll just say this. They don't come out around the clock. They're posted as a static report shortly before the Globex open each evening. So the Friday session that we're in right now began last night at 6 p.m. Eastern. So 5 minutes before the markets opened, all of our traders and trial members had all of these targets. The S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go take a look at the chart, and we'll start where we always do with the daily chart of the S&P 500 E-mini futures, the bellwether. So this was the new all-time historic high put in on the 13th. Okay, the new all-time historic closing high, 70.25 and a quarter. That was put in on the 12th. Today's the 16th. And from this new all-time historic high, we did what typically happens at a new all-time historic high. We get a retracement. So we had a 2-day retracement back to the BBC and the 38% fib extension. The pullback held. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. It just stands for bull-bear cross. When price crosses above the green line, we're bullish and expect higher prices. When we cross below the green line, we're bearish and expect lower prices, higher prices, lower prices, higher prices. And as you can see, the pullback definitely holds more often than not, but eventually we know that it will trade through as it did right there. So today we have a doji on a Friday. That's a day of indecision. This is where the institutional traders have to make up, and they're the ones who move price. They have to make up their minds. Are they willing to carry home open positions over the weekend? Now, blue and climbing is directly above price. That represents potential resistance. And we're sitting right on top of the black step line. That represents potential support. If we continue lower, then there's potential support at the 50% fib extension. Then the daily BBC, which is currently at 69.53 and change. And then the 38% fib extension. The black step line has crossed blue and climbing. Okay. And when that happens, when it goes from the left side to the right side, we expect a retracement. We've already had basically 2 retracements. Well, we had a retracement and then we bounced out of there. But yesterday we had a rally all the way almost to the 62% fib extension. But then going into the close, we failed and we closed below both blue and climbing and the black step line. And today it's just kind of a quiet day out there. So all alerts, both the Logic 247 and the concierge trade alerts, are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I've used for many years. And they say if it's not broke, leave it alone. So that's exactly what I've done. I've left it alone. Okay. Now the vertical lines separate today, Friday. Here's Thursday. Here's Wednesday. The The horizontal lines are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern. We've published the zones for our members every Monday for a little over 16 years. When price drops to a weekly zone, we expect support until proven otherwise. When price rallies up to a weekly zone, we expect resistance until proven otherwise. When price encounters a weekly zone, only one of three things happens. 70% of the time, you're going to see consolidation. You can look like that. You can look like that. You can look like that. 20% of the time, you'll see rejection, like you see right there. 10% of the time, the slice. It's when a 30-minute candle slices through a zone like it's not even there. Typically, when that happens, like it did here, price will retrace back to the zone it sliced through and then continue in the direction of the slice. Does it do that every time? No, but more often than not. As you can see here, we sliced through the zone, and then price, when it ran out of steam, when the move did, it retraced back to the zone it sliced through, then continued in the direction of the slice. So now these are the targets that were published last night, 5 minutes before the market opened. This was the opening candle. We were below the BBC, but we had the black step line directly below price. And when the step line gets directly below price, it becomes potential support. And it was. It walked us right up to the zone. We crossed above the zone after consolidating for 3 candles. And we hit this spot right here. And honestly, not a spot I would have anticipated resistance. Just isn't. But when the black step line crosses from the left side to the right side of blue and climbing, like it did here, what we do expect is a retracement to the BBC. And that's what we got. Again, when blue and climbing is directly above price, it becomes potential resistance because it's usually on its way to becoming red and falling. Blue and climbing is bullish, red and falling is bearish. And so we traded through the BBC. Okay, first the pullback held, and then the pullback held, and then we traded through. Then once we got on the south side of the BBC, the retracement, the pullback to the BBC held. Remember, price always reverts to the mean. And then we got a drop that took us right down at 10 o'clock this morning to the weekly trading zone, to the tick. And that short target was just based off this little double bottom from yesterday, right there. So we hit the tick, and then the next candle, we spiked the zone. And we spiked it right down to this little area right here. You see where the black step line got above red and falling? Turning it to blue and climbing. See right there. That is exactly this right here. That's all part of market structure. It's all part of learning how to read the chart. Okay. So when the market finds support, it's always going to go look for resistance. When it finds resistance, it's going to go look for support. Now, you got potential support here at the step line. And because red and falling is directly below price, that is also potential support. If price trades through red and falling, then potential support, of course, here. Then at the zone, which is 69.69/69.70. Each zone has 2 lines, okay? I only put one on the chart because I like to keep the chart clean. But when you copy and paste from the Telegram channel and put them on your chart, it will put both lines. 69/70 95/96, 25/26. And so right now, price is kind of quiet, just sort of sitting there. Got support here. We got resistance here at the BBC. Because the pullback holds more often than not, it held here, and it held here. And so far, it's holding here. Okay. On the Dow, we opened last night right at a weekly zone. We consolidated at that zone. Now, these are the zones that were published Monday morning at 6:15 a.m. Eastern. We consolidated at the zone, and then we made a run to the upside. And again, this is not really a spot I would have looked for as resistance. Maybe a little bit higher here, or up here where I have the long target where red turned to blue. And so price comes down, blue and climbing turns to red and falling, price gets below the BBC. So we get a leg and we get a retracement. That's resistance times 2. Remember, the pullback to the BBC holds more often than not. And when price rallies up to a weekly zone, we expect resistance till proven otherwise. Now this candle here is really interesting. This is the 9:30 open. It opened right here. We had a green candle all the way up to the long target, which was based off this right here where blue turned to red. It actually spiked it right up to the top. So that little round top up there, that's it, to the tip. So then we come all the way back down to the short target. Support bounces us up to resistance. And now we're in a similar situation as the ES. We're sitting right on top of the black step line, potential support. The next support level below that would be red and falling. And then, of course, the short target, which we've already hit a couple times, and the weekly zone. This low right here, okay, right here. If you come over here, see on this candle where you got a wick sticking up, and then this one you got a wick sticking down. If you put your crosshair right in the middle of those two, that is a spot I would have looked for as potential support. And we did find support there, but it spiked it a little more than I would have thought. It actually went down to the low of this wick right here. Support sends us back to resistance. And again, we're sitting on top of the black step line. On the Russell, here's where we opened last night. We got above red and falling, and on our way to the long target, we stalled out right here. These are not normal market conditions. These are not areas where I would have anticipated resistance. But it doesn't matter what you think. You do your best work, and 20% of the time or less, based on our last over 7 years of the logic alerts, tells us that market's going to do something different than what we anticipate based upon typical market behavior. Now, the market did find support here, not a spot I would have looked for, and here, not a spot I would have looked for. So, when the market doesn't do what you think it's going to do, it doesn't mean you go back to the drawing board or you go buy some new indicator or oscillator to try to solve the problem. You just have to humbly accept the fact that nobody knows what's going to happen next in the market. Now, you can flip a coin and be right half the time, but that's gambling, okay? And so we are rules-based. So we did finally hit the long target, which was based off right here where blue turned to red. And now we're just consolidating above the BBC, okay? Got potential resistance here, support here, here, and here. On the NQ, we opened at the weekly zone last night, and it took 2 candles to get through the BBC, and we hit the long target. So we got a leg and a retracement. The pullback held, sent us up to the zone where we consolidated. That sent us back down to the top side of the long target. When you trade through a CTA target, often on the retracement, like in this example right here, the top side of that long target will become support, which it did right here, 2 30-minute candles back to back. And then comes the Wall Street Open. Took us zone to zone in 1 30-minute candle. We then continued lower to the short target, which was based off this bullish cross. That's when the blue line gets above the green line and leads to an extended move. The first time price revisits that area will almost always be good support. But we spiked it. The markets were heavy. Buyers finally came in here. That pushed us back up to the zone where we expect resistance till proven otherwise. But now notice the black step line is attempting to cross from the left side to the right side of red and falling. Once that step line crosses red and falling, that's when we look for a retracement back to the BBC. Then it becomes a question of, does the pullback hold or not? If price trades through, you got a bearish cross right there. That's potential resistance as well as the long target. On crude, here's where we open. We hit the BBC, pullback held, sent us down. The low right here was 58.94, so we missed the short target by 4 ticks. Support, of course, will send the market looking for resistance. So we got a leg and a retracement, a leg right here. See how we traded through? We sliced through the zone and then it came right back and held and then continued in the direction of the slice right up to the long target. Then we get another retracement back to the BBC and the zone. That's support times 2. When price drops to a zone, we expect support. When price drops to the BBC, we expect support. So, 2 reasons for good support. So that gave us a bounce, but then we ran into red and falling, which is bearish. So that pushed us below the BBC. Now we've bounced back up. Looks like crude wants to roll higher, grow higher, move higher, go higher. But be sure and keep an eye right here. And then you got to come over here and look at these areas. I would wait for crude to get up to about 60.50 before I started to entertain long trades. Now, if price ends up dropping lower, in other words, we've already traded through the BBC and bounced back up. So that pullback held, but we're still dealing with red and falling here. So if it pushes price lower, 59.40 to 59.30, but you should expect support right here where the bullish cross is. Okay. Gold, here's where we opened. We dropped to the short target, consolidated, got a bounce, and this was just very difficult trading here. Then we had a huge move to the downside. Took us almost to the zone at 45.37/38, and then we recovered quite a bit of that, but we are below the BBC, and now the step line has crossed red and falling, so anticipate a retracement back to the BBC. And last but not least, silver. Here's where we opened last night, and by the second 30-minute candle we had hit the short target support, bounced us up to the zone resistance, back to support, back to resistance, back to support, back to resistance, back to support, and then we came down to challenge these lows from yesterday. Right now the step line has crossed, so price is attempting to work its way back to the BBC. If it's able to get above the BBC, you got potential resistance here, here at the bearish cross, and then here, and then of course at the zone. And that is the highest weekly zone this week for silver. So one last look at the daily chart of the ES. We do have a doji with a little red body. Remember before, there was no color there, it was just a doji. Now we got a little red, so the step line has crossed, so I wouldn't be surprised to see us close down near the BBC. And then of course we have support at the 38% fib extension right below the BBC. To become a member, email Valerie, support@cfrn.net. Just let her know you want to become a member and she'll email you the information you need to get signed up. Once you're all signed up and become a passport holder, you get 2 hours of live training every trading day. On top of that, you get private one-on-one mentoring. There's no extra charge, you just have to ask. The strategy you learn, the indicators you use as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs. Price flows the same across all markets and time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. As a passport holder, you get the Logic 247 alerts around the clock. That will help you learn to read the chart. You get the concierge trade alerts 5 minutes ahead of the Globex Open. Every Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. And when there's a Monday holiday, like we have coming up on Monday, then the weekly trading zones come out Tuesday morning at 6:15 a.m. Eastern. Every Thursday night at 8 p.m. Eastern, you're able to attend the members only workshop, and you get the golden keys that open all the private channels in Telegram. Everything a trader needs, all under one roof, one low price. So email Valerie today, support@cfrn.net. We won't be here Monday for the holiday. Michael will be out Tuesday, but the room will be open for those who use our charts in the room. And I hope you have a great weekend and a happy MLK Day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.